massive NFL fans would realise that it was Super Bowl day today. Ash won't be joining us, not because it's Super Bowl day, but because he's jumping on a plane or is already on a plane en route to Singapore. There must be an IFP event on this week, I'm guessing. So we won't be with Ash today, but George will be joining us a little bit later. And of course, as always, George will have some wonderful insights into the way he trades the markets on 5-minute charts. Happy Monday, Paul P, to yourself and to everybody in the room. All right, let's not muck around. There'll be all the usual stuff in the show, apart from probably some fundamental analysis from Ash and, of course, the COT data and seasonals, which I have no idea about. If anybody wants to share those with us, then please do. That's all good. As always, if you want to say something, easy. Just raise your hand and I'll let you in the room. And you'll have full privileges. You can share charts. You can chat to us. You can do whatever you please, as long as it's not play something that's copyrighted, because I get into trouble when that happens. Righto, let's get underway, shall we? And first up, we're going to have a look at gold. Just because I've got an order on gold, actually, I'll share that with you if you wish. It's on the weekly chart, daily chart. Yeah, it's kind of a bit of both, really. Terrible candle that I'm trading, which is this one here. As an entry candle, it's more of an entry level than anything. I'm trying to force my way in here, to be honest. I see this on Thursday's bar. Had I been in front of the charts on Friday morning, I would have actually put an order in underneath that bar with my stop loss, probably where it is, because the pivots are in a strategic position there, and I think the stop loss needs to go above them, which is what I've done. So I'm entering at $1,852, and I've got my stop loss at $1,905. I've got a bit of a misnomer at TP1 at 1830. All I'm going to do at TP1 is move my stop to entry. Do nothing more than that. I won't be taking anything off the table in terms of money. I won't be banking. I'll simply be moving my stop to entry. Reason for that? Well, if you look at 2 weeks ago, actually I placed this order, hadn't I? I'll come back to that, and we'll go to the hourly chart, which we need to depict a range upon. Range going from the open of Tokyo, which was there, to current candle, which is obviously here. So that's the bottom of the range since we opened Tokyo, or since Tokyo opened. Need another horizontal line. And that's the top of the range. So what we're seeking to do is break out of that range and get the breakout and put some money in the bank. The problem with this one is, of course, we're trading straight into the weekly pivot. So the reward to risk here is going to be very poor because we've got to take profit at our first resistance, or indeed, hang on a second, I've got some people needing to come into the room, I think. Oh, we're okay. So, yes, we've got to take profit at first resistance or support, as the case may be. And that appears to be the weekly pivot. And DS1's a bit of a soft level, but I'd probably go for the low rather than that. Both of them poor reward to risk, but that's what we're trialing. So let's go with it. And for those of you new to this this program, welcome to you, number one. And number two, if you look to trade this, it needs to be traded at very, 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 very minimal risk, because it's not a proven system. It is testing forward, if you like, forward testing, as I call it. Righto, we're going to do a buy stop. You can see I'm going at 0.03 of one lot. That's the amount of risk I'm prepared to take, no more on this. It's not my money. This is Access to Wealth account. So it's really going to affect me too much. Of course, it will in terms of the record. So we need to be absolutely circumspect with this. Right, the high of that bar and the range of the day is 1866.61. So we'll go with 1867. It is a buy stop. 1867 would be the entry long, and the stop loss for that would be the low of this bar, which is 1856.99. We'll call it 1855. 1855. So you've got $12 of risk, and we'll put the take profit in as the open of that bar, which is, sorry, this is for the long weekly pivot. Weekly pivot level is not showing me at the moment. There it is. 1869. We'll call that 1869. $2 for 12. That's ridiculous. That is ridiculous. We'll fudge it and go to DR1. 1874. I can't put that as a take profit. Yes, I can. 1874. All out at 1874. So that's a bit better. 7 for the risk of 12. Okay. Now, we also place a short order. So this is a one cancels other. If the long is triggered, we cancel the short. The short is triggered, we cancel the long. Again, 0.03, pending order, sell stop. That's a buy stop, sell stop. 1867 is the stop loss, that much I know. And 1855, was it? Yes, 1856 is the entry. And the take profit level is the open of that bar, as I said, where's it gone? 1853. It's only $3. That's very poor. Is that right? Yep, it's only $3 for a risk of 11. It's very poor reward to risk, very, very poor. But I can't go beyond it. So we will use it. These things we need to iron out, guys, as we go forward, of course. But for now, I'm just using the rule of first support level. Would I take this normally? No. Not on your life. Well, not on my life. There we go. All right. So both orders in place. If this triggers long, we cancel the short. If it triggers short, we cancel the long. Rightio. And going back to that order that I have got in, this is a serious order that I do have in place. Reason. Well, I don't know how long I've been harping about this, to be fair, but I cannot, and I keep saying I cannot unsee this double top sitting here. And since that occurred, I've been looking for a significant lower high. Now, that's significant, and it is a lower high, and it drove the market down for quite some time, as you can clearly see. And now the market has come back pretty much to that level, but certainly to this level here, which is former resistance. If I go to the monthly chart, you can see that there's just clear air everywhere above this level here. And for that reason, we're still in lofty territory. I'll put it that way. And I've got a double top on the monthly chart as well as the weekly chart, same top, of course. And I've got this now significant, what I call significant lower high. Why do I say it's significant? Well, it's significant because of that, the rally up. And it's at this point here where we are right this moment in time, I believe that we're going to get a decision by the market as to which way this is going next. Now, I can't ignore what I'm seeing, and what I'm seeing is this big double top that I explained months and months ago, and then the lower high, et cetera, But this is also the lower high. In fact, this is the real lower high that I was looking for. I wanted to see a decent rally and then a lower high. If you look at the weekly chart 2 weeks ago, that bearish engulfing bar is a massive, massive signal to me that price is going to continue to fall. For how far? Well, I had in my head some time ago that we're going to 1200. I took that off the table some time ago, probably when we were about here somewhere, because it looked for all intents and purposes as though we were going to certainly test this level, which we've done, and this level, which again we have done. But it's also a very big turning point, and that's why you've seen that big reversal bar, on top of the fact that we had a lot of news, of course, around that, and drove the market down, or really drove the dollar up more than anything else. So again, on the monthly chart, that's looking extremely bearish, but we're only halfway through the month, of course. But the weekly's telling me that 2 weeks ago, it was saying, okay, we were rejecting this level again. Daily chart on Thursday, as I said before, did exactly the same thing. Did it really break through a level? I wouldn't say it did. But since then, we've had a break and retest, if you like, of the pivots, which is interesting. The pivots, of course, move as the week changes. Is that significant enough for me to take a position? Well, I think it is, based on... yes, Paul, you're right. Ash was mentioning that. I don't know if it was bearish seasonality, but it was the end of the bullish seasonality, I think, is the terminology, or how it was described. But does one mean the same? Is it one and the same thing? Good question. I'm not a seasonality aficionado. In fact, not even close. So either way, it does add to the technical scenario that I'm seeing anyway, in that we've had monthly so far, not finishing the month, only halfway through, weekly telling me short, daily telling me short, not convincingly on the daily, but there it is. I think if this level breaks now, then you're going to say, well, we saw the hello, Lewis, how you doing, mate? Great to see you in, of course. That will just, it'll give it a big tick if it breaks below this level. And I think we're destined for here in the short term. So they're the levels that I've chosen. 1852 is my entry. Unfortunately, I've got to put my stop loss way up here, which doesn't give me a great reward to risk. And as I said, 1830 is going to be my first take profit level, which will be only stops to entry, nothing more than that. Lewis is looking for a break of 1807, which is down here, and equivalent to that monthly pivot. Yeah, look, to be fair, I hate the candle that I'm trading, but I'm feeling that I have to force my way in here because of what I'm seeing on the bigger time frames. Sometimes you just have to. And I feel this is one of those times. I'm only going in at 0.25%, because if this does go, it'll hit this level and it'll bounce off this level. And that's where I'll get to add to it if I get the right signal at that time as well. So that's gold. Nothing on the hourly chart yet, I don't think, in terms of the break. If I was trading this today, to be fair, I'd probably be looking to trade it up to here, because that looks sensible to me. But I'm hopeful, of course, that we go in the opposite direction. Righto, I've taken up too much time on gold, or I think I've taken up too much time on gold. Let's go back to last week, those of you who were in the room. will recall I was talking about Aussie yen, and my goodness me, look at it go now. We were looking to trade this, and I nearly replaced this order this morning. We're looking to trade this long above this bar here as those of you who follow my system of trading, that looks absolutely like a false break of this support level. Now, you'll also probably say, well, hang on a minute. Don't you say that the three amigos break to the downside? And yes, I do. I 100% do. There's one amigo. There's two amigos. There's three amigos. What are three amigos? Well, they're actually false breaks of a range. And there's that range for me. I could make it more accurate, I'm sure. And as soon as I see those three amigos, false break of the range comes back inside, false break of the range comes back inside, false break of the range comes back inside. In fact, there are probably four, but I like to have them in ascending order. Yeah, for fear of what do they call that? Being sued by whoever called them the three. What were they formerly called? Yeah, the three little sisters. What three? I've even forgotten what they're called. Three red ducks? No. Three little Indians. Thank you, sweetie. Yeah. So there is an actual chart pattern that somebody coined years and years ago, and it's in textbooks all over the place. I don't think it's exactly the same as I play it anyway, but I've decided that it goes to Jeff terminology rather than traditional terminology. So it's three amigos now. And I think actually Paul P, was it you? Said, why don't you call it three amigos? Somebody said, why don't you call it three amigos? Can't remember who. Anyway, the point of the exercise is they're ascending. 1, 2, 3. Actually, George is in the room, and I know he likes. It was you, Lewis. All right, cool, mate. Thank you. I think George likes this step-up pattern as well, but I don't know if it's. And I'll have a chat to him in a sec. The point of this exercise is, if it is giving me false breaks of a range, I anticipate that the range will break to the downside after the third false break. And to get into that, I need to see, well, something like a lower high or any slingshot pattern or whatever the case may be. And it did, as it generally does, break to the downside. Now, what I always say is, I don't know what happens next. But what generally happens next is it will bounce off support, which it has done, as you can clearly see. On this occasion, it has come back into the range, which is the signal for me to say, okay, well, it's a false break of the bottom of the range. Then we're probably going back to the top of the range. And that's exactly what I tried to trade last week with my entry here. Oops, I lost my pen. With my entry here and my stop loss here. No action at all last week on this pair. It was just every single day was a doji pretty much. And like I said, I very nearly placed that order again this morning. I didn't, but I'm still of the opinion that this is going to here. So I've got to find a way to trade that to there with this in mind, of course. I'm just hopeful it doesn't spurt out there without me. So I'm being so long-winded today. It's ridiculous. I'll very, very quickly go through CAD Swiss. CAD Swiss is another one, and man, oh man, I couldn't have caught this right. I was hunting this all week. In fact, I've been hunting it for 2-3 weeks, maybe even more, trying to get the breakout to the high side here. And of course, every single day I look at it on every single time frame, looking for a way in. And on Friday, I think I came back into my office mid-afternoon or something. I can't remember when. And I saw this bar here forming. and looked very much like it was going to be a bearish decisive bar. And I did post in the Telegram group, if this bar here closes as a decisive selling bar, then I would buy it. However, it closed as a doji. And look what would have happened had we got in on that bar with if you use the tight stop loss, right? Entry there, stop loss even under the daily pivot, 6, 7, 8 to 1 or something. Ridiculous. But that was a news event, right? It was CAD news. So there was just no way I could really trade that. Sadly, so I've missed the breakout. Or have I? We're still at the top of the range. And you recall the last or the second last order I put on this was a break above that candle right there. Well, pretty much that's exactly where we are. So we're back to where I was this time last week. What am I waiting for? I'm waiting for the pullback now to the daily pivot, which apparently we very nearly got on the 4-hour chart. I'll wait for this till tomorrow and hope again that it doesn't take off. But I'll be looking to trade this bar tomorrow. I'd love to see it red, and I'd love to see it close beyond the pivots. So that's a heads up on CAD Swiss. Missed the big one, but hopefully we can pick it up a little bit later. I don't know why I've got that there. That way. The other one, Euro Kiwi, that we did trade last week, we traded underneath this bar here. Again, pretty clear false break on a smaller time frame, but this bar here. And TP1 was pretty much on the bottom of that candle. We took TP1 and moved our stop to a safe place. And, of course, our stop got hit, our trailing stop, and that turned out to be a break-even trade. Had we left our stop where it was, we'd still be in that trade, still lingering around that TP1 mark. I can't trade through that monthly pivot without taking any profit. Maybe if you get in on a smaller time frame, you use that as your target, right? And in which case you would have had a nice winning trade. But that is where I'm at. Do I still want to trade this short? Yes, I do. Why? Because I'm trading the structure being this broadening price pattern. And all we were looking for was the lower high, which we got on a buying bar. Perfect, exactly what we want. And unfortunately, trailing the stop tight, we're now out of that trade. What do I need to see now? Well, I could play this trade line exactly the same as we played that trade line. So price back underneath, which it's done. Tomorrow, if we got a bull bar, even today, if we got a bull bar here, that would be a signal that if we entered here, price would go lower. Not because we entered there, but because momentum would take it there. Big problem. Monthly pivot sitting there. It's not untested, so it has been broken and retested. So that is a reasonable risk to take, but it is a risk added to the inherent risk, right? So you'd have to take that at a very small stake. They're the three. That's up to date. Now I've got, 1, 2, 3, 4 on my watch list, which I will come back to when we've had a little chat to George. You've got the order I've got on gold, you've got the breakout for gold, and you've got an update on those 3 orders that we had in last week. But let's go to South Africa now and say a very, very good, is it afternoon, George? Or is it still morning?
No, it's still morning. It's 10:20 a.m. So it's
Awesome.
bright. Well, it's not bright and sunny. It's been raining, but it's still morning.
And that's why you're looking as fresh as a daisy on a Monday morning.
I'm telling you.
Did you watch the Super Bowl?
I didn't actually. I mean, I get all the feedback from my brother and sister over there, but it just the bug never beat me. I'm a rugby kind of guy, and that's it.
Yeah, well, of course, South Africa. They don't play NFL in South Africa.
No, not at all.
No, not at all. Well, I better not put any spoilers out in case somebody wanted to watch the replay, including Ash if he's tuned in. Yeah, it was a really good game. Again, I won't put a spoiler in by telling anybody who won or who lost, but it was an excellent game. I didn't like the way it ended. That's not a real spoiler. Just a sad way to end a great game, really, at the end of the day. But, and I thought, what's her name? Rihanna, I think that's her name, the entertainer. Thought she was poor. But then I thought she was lip syncing, which is ridiculous. And anyway,
I've heard they do that sometimes.
Yeah, well, I mean, how disappointing is that? You go there to watch somebody live, and my goodness, they're lip syncing. you might as well be at home listening to stereo. Anyway, mate, what's going on with you? What are we looking at?
Well, let me. I'm in waiting mode, but just give me.
Oh, sorry, mate. Yeah, of course I have to.
If you can
do all these things.
On both laptops.
On both, no worries. Yep, there's one.
So I'm gonna just start.
And there's the other.
Super with UK 100. So I'm waiting here. This is the first candle, outside candle, which is a trading range. So I'm waiting to see what happens at its measured moves. So right up here, which is possibly an attempt to break out above the high of yesterday, high of Friday. And if we do get there, I'm looking to sell. The reason I'm looking to sell is if I look on the daily, trading range, price action. So anytime I get to any attempt to break above previous highs, I got to sell. I mean, that's all that's been taking place here. So I'm waiting to see if I get an opportunity to sell. That green line we saw is the high of this doji here, Friday's candle, not this all-time high on my chart here. So I'm looking first to see if the bears will just come and carry on with the trading range price action. So in UK 100, bit of waiting. It is setting up. If I get any form of double top here, this top and that top, then I just look for a lower high. Then I can look to sell that. Hoping to see if we get down to kind of low of the day. If we get further than that, fine. But I'm just going to trade it like trading range. Earlier on, just before the open, because I was in the market, I was keen to see if the bears would come in and defend that lower high. And this would have been from the Friday session, right? So that's that high, that lower high. So it's quite happy to see bears creating a huge gap down, wedge pullback. So I thought we might get something here, but unfortunately we didn't get that. So happy to wait. Took a couple of trades on Hang Seng 50, small risk, 0.25%. I'm just minus 0.5% on this market so far, which is I'm not worried about that. But here's the rationale for taking those early trades. So wedge, so this is US session, right? So this was the open of today. At the open, the huge gap down just ended up as a failed wedge bottom, 1, 2, 3 with the US session. We got, broke beneath the low of the opening candle. And when we came back into the range of Friday, and I saw this reversal candle here, that's trades that I take regularly. So took that trade, just had a measured move stop somewhere up here. Then, of course, I was hoping for acceleration down. We didn't get that. Bull candle, if we'd gone a bit high above that, I would have closed. But with that reversal candle, little micro double top. So market went up there, came up again, came down, went up again, came down. So I was happy to stay in, went sideways. And eventually when we, got up here, I just closed the trade. Then when we had that pattern, thought, hey, here go the bears, finally. Took the trade, ended up getting out with this bull reversal candle. So a little bit of a loss there. Another setup that I trade regularly, higher high, this high, higher than that. After this high, been higher than that, and the potential wedge stop. took that trade, and somewhere in here I said, get out. So banked a little bit, not much there. So I am still bearish, and I'll tell you why I'm bearish just now. What I'm waiting for, now we have a nested wedge pattern. That's a wedge. Okay, so start off here. 1, 2, 3. Another one, 1, 2, 3, 1, 2, 3. A wedge is just a three push pattern. So now what I want to see would be a lower high. The problem with this market is that in 4 minutes time, we're closing for 45 minutes. So, the open is just going to be like news. So I don't trade into that, but I'm very keen to short depending what structure we get at the open. I still think today has the potential to be a pretty large bearish day. And the reason is this. This is on the daily chart. Bear breakout, pullback. That bull candle is a pullback. I came back as far as I can see it to test the 10 EMA. And of course, I'm using the 10 EMA to indicate the strength of the trend. So what I'm expecting the bears to do, higher probability, is for this pattern here, first leg, pull back to get to this level. And we also have a little trading range here. So this sideways pattern up to the pullback. If the bears are strong enough to sell down again beneath the low of yesterday, their goal is to get to this level here. Then you have, this is a magnet. I mean, this is where the bulls broke out above this December trading range. So I'm going to just hang around. If I get a reversal pattern like I showed us there, I'm going to jump in, looking for the higher probability event of the market selling off a little bit more. Euro.
George, before you leave that one, mate, if I could just question you, go back to your previous chart. I guess it was your 5-minute chart.
5 minutes. Okay, let me put it on.
Okay. Yep, that one. I was talking earlier about what I call now the three amigos. Thank you to Lewis for naming that for me. It's formerly known in trading parlance as the three little Indians. Now, I actually don't know what the three little Indians price pattern is supposed to represent, but I turned it into my own thing as usual.
Right.
You also have a liking for higher, high.
Right.
What do they mean to you in terms of a chart pattern or a structure, if you like, and what should we look for thereafter or after their formation?
So for me, it's in the very simplest of terms, it's the market trying to do something 3 times. And if you look at enough patterns, when the market tries to do something 3 times and it fails, tries to get to a new price 3 times, it's going to decide, well, let's try go the other way. So that's the, I guess, the human psychology behind it. So now what I want to see is the market failing to go above the third attempt for the 4th time. I want to see that failure reflected in terms, in this case, as a lower high, because we're looking to go short. So here, 3 attempts to go 1, 2, 3, and then market tried to probe down to a different level after failing 3 times to go up. The bears were not strong enough to get down, so the bulls came back into the market, and the acceleration up created another 3 legs, 3 attempts, 1, 2, 3. So it's still the same forces in play, market trying to do something repeatedly. The fact that I see it recurring now, it makes the pattern stronger because it's like a bird nest. Now it's nested, patterns within a pattern. So that makes it much stronger. So all I want, if we didn't have, the market shutting down in a few seconds, I wouldn't take that. I'd rather take a little bit higher, but still a lower high. Any trader could take that. Your stop is here. If you want to take it early, you could take that. But I prefer my lower high to come a little bit closer to these levels.
Mate, is there any expectation that the target area would be lower than the first attempt or the first high, if you like, or the first sequence or the first cycle of that first high? In other words, the low that occurred after the first high, the first of the three. Would that be your target area, or would you just simply use your daily levels that you use
for profits?
Yep.
Okay, so for profits, I'll take it in stages. So let's assume I took it here. So the first thing is I just look to the left and say, is there any distinct kind of range that the bears would like to break out of? So the reason I wouldn't take this, thanks for asking that, is because I'm seeing this as nearest trading range, and the objective is to get down here. So that's a hard way to make money. But if we get a little bit more up, so let's say we got to this level, then I'm saying, okay, the little trading range we have is that high where I'm taking the trade and that low. So the objective is to get here. That's enough for me to at least aim, for with the stop above here, maybe 1.5, 2 to 1. That's the objective. Then if we get down here and the bears are strong and they break beneath this, then I just go again and say, okay, now we have this high, that low, if we're breaking beneath this low, then I'm saying, if the bears are strong, the objective is to create a measured move that high to that low when we're breaking beneath that. Now that's going to come, that's going to go beneath the low of yesterday. That's a level of support. So if I'm taking a trade, I've got a choice. Do I take my profits just above that, or as I prefer, rather sacrifice a little bit if it bounces off, expecting the bears to create another lower high and accelerate beneath here and take that level. So the more we create these ranges, the more I keep looking for measured moves. I mean, ultimately, if we continue to sell off, and we get down to the low of the day, if it was to be one of those rare days when it just keeps working out, then I'm looking at the high of the day to the low of the day, and I'm just going to say, well, maybe that's the potential to get down here, which all of a sudden starts to make sense because this is a measured move of the full range of Friday that the market can get to down here. So I keep looking at the measured moves. And the reason is I know guys will be taking profit there. So I'm happy to hang around and see, besides the bounce to take the profit, are the bulls going to come and reverse? If they're not reversing, then I'm going to stay in my trade and look for ways to just keep building up the positions. Because, you never know which of the days becomes one of those days that, you keep building positions and you make good money on that day.
Cool. All right. Thanks for that.
Then the other one I'm looking to go short, I mean, nothing is set up as yet, is Euro. And the reason for that is just looking at the daily. So my read is, that bear breakout is a good first leg for the bears. They've come back to test the 10 EMA. So the second leg of this move, leg one, pullback, leg two is down here. At the same time, you have just the bear breakout itself, these three candles. The measured move of that is here. So there's a magnet here, which is below the low of this bull candle, which is also, this is the midpoint of 2022 range. So there's magnets that I think can pull this market down. So I'm looking to go short on Euro. I just need to get the setup. So I'm just keep watching that and see if I can get that. So Euro is on short. Then just one other one. I'm just going to switch to the other laptop. I was just looking to go. Okay, I'm trying to just share my screen here.
I'm on board with the euro short, by the way.
You're on board
Also
with
looking
the
for a short. Yep, yep.
Fantastic. Brilliant. Brilliant. All right. So I'm not sure why my laptop is viewing this differently. Let me just change speaker side by side. So I find a way to share. Okay, share screen. Sorry about that. I don't know why that took long.
That control panel is ridiculous on Zoom. It jumps all over the place.
All right, so I'm just going to show yen. Yen was really there's such a thing as an opportunistic trade. So on the daily, so I've got this shouldn't be showing on the, but don't worry about it. This green and the red are all should be in the 5-minute. But in any case, I was looking to see if there was an opportunity to short at the top of Friday's doji. I mean, yeah, it's a doji Friday's candle. So I was just keeping my eye on it while I was, looking at other stuff. And again, there's a wedge top. 3 efforts to try and get above the high of Friday, and we succeeded. But then we created another wedge top here. So, I was trying to find ways to jump into the market. And when I had that lower high there, I thought, well, let me short and see if so that whole thing I was talking about, there is a little trading range created here. So I was trying to see if we get down to here, and if we could accelerate below. So I took that. I mean, that's when I see that after all of that, I'm going to take that trade. But, we go down here and it didn't get much acceleration. So, I got out with enough for a hamburger and chips and maybe tomato sauce. If they'll give it to me.
Yep.
So, but
inflation's taken care of that, though. It's amazing how the brokers don't give us more money back now. Now the inflation's at 7 or 8%. How does that work? Everything's going up. How come we don't get more money for our trading?
Exactly. So yeah, so I'm in a bit of waiting just to see what gets up. So like on this account, I've got 3 markets: yen, S&P 500, and German 30. So German 30 is one that's also pretty live at the moment. I am looking to go short. Trading range behavior. So, I just want to see if there's an opportunity to come off this is a daily chart of the, 10 EMA, which is a test of this kind of bearish lows. I don't think we'll go very far. We might be surprised, but there might be an opportunity there. So I've got that. I'm keeping my eyes on it. And again, same kind of structure that's, it's forming, but it's not quite broad enough, if that makes sense. I like my pre-push patterns, my wedges to be a little bit broader. This is a little bit tight. So, if the bears come off this top here, then what I want to see is again close beneath the EMA, a lower high. Then happy to take that and see if we can get down to the low of Friday, low of yesterday. So that's kind of what's on my list, Jets.
Brilliant, mate. As always, it's a list that I'm pretty much interested in also, in particular the euro, and I'll get into that in a sec as well. I don't know that there's too much more for me to ask you around all that. So, mate, if you've got to take off, then by all means do so. Thank you very much. If not,
no problem. I'm just going to sit in the background. If anything happens while we're still here, I'll just interrupt you and just talk about it.
Brilliant. Please do. All right. I'll get back to a little bit of my analysis and what I'm looking for this week. But before we do that, we best go through and have a look at the news events of the week. And I know everyone's over the top of that. Let me go there or there. That's where I want to go. I am now screening. Yes. All right. right screen. Yeah, we're missing Ash Lewis, absolutely. He goes through all this and he gives us an opinion on what he thinks may happen if these things are right or if they're wrong. And I'm not qualified in that area too much. I'll give you an opinion, but it's not a professional opinion by any stretch of imagination, so you can take it with a grain of salt if you like. But sometimes it just makes sense. And if it makes sense, then you've got a good start. It really, the big news of the week happens tomorrow or tomorrow evening in the US session with the inflation numbers coming out. And interestingly, the economists in the States are tipping that the CPI is going to rise, whereas last month it dipped and 3 in a row. That's interesting. Interesting because that would suggest to me exactly what I'm not seeing here. Month on month, right? And that's where it gets a bit tricky, I suppose. So 0.5%, what they're suggesting is it's going to be 0.5% more, the CPI, than it was the previous, 0.6% more than it was previous month, which gives you an annualized number of 6.2%. I don't quite understand that, but anyway, that's what they're predicting. So they're predicting that inflation is going to decrease year on year, which is the number they're looking for, of course. And if that's the case, or even if it was worse than that, well, not worse, it's a relative thing now, isn't it? Worse, what's worse? Is it worse to be having a consumer price index rising? And I would suggest in this market it is, yet try and equate that to what the dollar, for instance, or the S&P 500 is going to do is another challenge because, in a certain environment, one of low inflation and one of low interest rates, one would anticipate that a drop in the CPI would not be good. Yet in an inflation-driven market and an interest rate rising market, I'm kind of thinking that doesn't logically make sense to me. So I'm thinking quite the opposite. I'm thinking that number there won't be good for the US dollar to start with. If that's the case, if it were to go higher, then I would expect that the US dollar would rally. Again, I'm not qualified to actually be forecasting anything like that because I don't truly understand economics the way I should. So take that with a grain of salt, as I said, but that's the way I read it. So the core CPI month on month is tipped to go from 0.3% to 0.4%. That's what I can tell you. Also got inflation figures out of the UK on Wednesday, and that's tipped to go down. Interesting. So that's tipped to go down. That's tipped to go down. What are we thinking, guys? They're not going down fast enough, right? Interest rates are still going to be high, etc., etc. I'm not going to forecast anything like that because way beyond my pay grade, to be fair. Retail sales also out of the States. That's an interesting number. That's tipped to improve. That's month on month, so it's probably taking into consideration the January figures, which Christmas, don't know. Anyway, I'm not going to give opinions on these because they could be way up. Interesting numbers here. Last month, the Aussie employment change was very disappointing, and the interest rate, I think, went up from 3.4 to 3.5. Yes, it did. Did I just say interest rate? The unemployment rate. They're tipping that's going to remain steady. And Aussie's very, very interesting for me because I still want to get into that Aussie yen long. If this were to be the case, the unemployment rate remains stable or even tipped back down to 3.4%, then the Aussie's going to rally. If it doesn't and goes above that figure, then I think Aussie yen is not such a good prospect. Then, of course, you've got the purchasing producers index coming out, or producing, whatever they're called, the price of goods, finished price of goods, they call it, I think, in the States. And that's tipped to improve. In other words, that's inflationary, in my humble opinion. So there's a whole lot of things going on there that will affect the inflation numbers. If the inflation numbers get affected, we're all going to get affected. The dollar's going to get affected. The market's going to get affected. So it's one of those weeks where we will see movement. I've got little doubt about that. Let's go back and see if gold's been triggered. It hasn't. Right. Now, just to go into this is getting painful for me. I need to see a bounce here today. It's okay if it hits the monthly pivot and bounces tomorrow. That's what I'm looking for. In fact, I'd like to see it close below the monthly pivot. So this is Euro Kiwi. Closes below the monthly pivot today and comes back and retests that trade line. Forget that one now. It's now not applicable. But what we're looking for here is another lower high, right? I've given you all the rest of those. What I haven't given you is what I call the game changer bars for the week. And we go to the weekly chart for that. That should be down here. It's really in the road. Maybe I need to tell Peter about that. Lodge my protest. We have 4 game changer bars for the week. Euro Aussie is 1. Now, Euro Aussie, sadly, really, no, it's Euro CAD, sorry, not Euro Aussie. Euro Aussie suggesting that we do go short here. Now, I said this in my Telegram group this morning. I can't go short here on a bar that big because we're heading straight into support. Straight into support. I'll go a little bit wider so you can see that clearly. And it's a strong support level. It's been support here, resistance here, support here, and now we're fiddling with it. Broken it, retested it, suggesting that it's likely to go down. I agree with the directional bias. But to actually trade that bar, similar to what we're trading on the gold breakout, I guess, if you were to trade that bar, you'd put your entry there. Your stop loss has got to be there minimal, there mediocre, there maximum. But let's go with the minimal, 285 pips. And there's the level you're trading straight into with 5, 6, maybe even not even that, maybe 10 pips. The reward to risk is ridiculous before you hit support. Then there's another level of support underneath here at 90 odd pips, which is far, far better. So if you're willing to take that risk on going through that level, hitting the train track reversals, open and close here, then okay, it makes sense. But it's super dangerous. Better way to trade that, in my humble opinion, is to wait for the pullback, which probably we've got here. It's not substantial, but this chart's a mess to me. We've got to get back up to a support level or resistance level, rather. And there's a super one right here. Superb. So I've got to wait till we get up to here. There's a horizontal level coming through there. I'm going to miss the confluence by time. That won't work. But if we could get up here, consolidate a little bit at this resistance level, back underneath and retest it, then I've got to trade on the hands. But until that happens, it's just a mess here, and you're trading straight into that support level. Doesn't make any sense to me. That's Euro Aussie. So Euro Yen is the next one on the weekly chart, also suggesting that we go short. Now, going back to my 3 amigos, there they are sitting there, 1, 2, 3. The range is not nearly as well defined as I would like it to be, but let's put it in anyway. So the range is probably there-ish, let's say, which means to me that the 3 amigos, false break, false break, false break, that's telling me that we're going to break this range to the downside. And like we saw on, what was the last one? Can't remember. Euro CAD or Euro CAD maybe, Euro Kiwi, sorry. The expected level that it's going to is that level there. So what we've now got to work out is how do we get into this and make some money? So as always, the best place to trade this is from resistance. So we've got to find a resistance level. We've got that. We've got the bounce off it. Now we're looking for a lower high. So we go down a few charts. And what can we see apart from the mess here? So you don't want to trade in this area. Well, I don't want to trade in this area. Again, what I'd be looking for is a false break of resistance. Why? Well, to me, it's logical. If price doesn't want to go above that level, what's the next logical thing to happen? It's going to go the other direction, right? To a support level. So all I need to see really is price get up to here. It doesn't really even have to break that level. It just needs to hit there and give me a lower high. But if it were to break that level, find that resistance area, come back underneath, retest it, then I can trade it short. Bearing in mind that you've got pivots in the way, but all of these pivots have been broken. So they don't hold near as much sway as they would if they were untested. So Euro Yen is a definite watch list for me as a short in agreement with the weekly game changer bar. But the weekly game changer bar, again, is too tough to trade because if you get your stop loss there, entry there, you hit support there, you've got no reward. It just doesn't make sense. So wait for something better. Maybe, just maybe, this candle here is interesting on the weekly, but that's next Monday, right? We don't want to wait that long. We want to find something in the meantime. So what I'm looking for is exactly as I've just described on pretty much both of those. It's exactly the same. Euro Kiwi, as I said, painfully, our trailing stop got hit last week for a break-even trade. We tried to take advantage of a false break here. Let me just find that level. There we go. Now, I've got to say, what I normally like to see is two candles open and close above the trade line before we come back underneath and retest. Exactly, I've just described to you, right? On Euro, I was in Euro Yen. This is exactly the scenario. So we've got above the trade line here, breakout. A little bit of consolidation. I normally like to see two candles open and close, then come back underneath and retest. That green bar is crucial to the trade. If we, hang on a sec, I've just lost something here that I need to have. There we go. If we were to get a red bar there, I wouldn't take the trade. Why? It's a Jeff thing. It's almost an allergy. Almost an allergy where I just don't like trading with the rest of the crowd, the lemmings, if you like. And please don't be offended by that. Anybody who trades bear bars, short, I have absolutely no problem with it if they're in context. Everything needs to be in context. So if you're trading trends, right, then you're trading continuations. And I get that, but I don't do that. I do something completely different. So what I'm really trying to do here is see this range. Couldn't be clearer, right? Let me make it clearer. There's a box range in there that just stands out. And like any other level, any trade line, any whatever you call it, any level at all, don't care what it is. If it's a horizontal level, oblique, we've yet to find the circle, but when it breaks out, comes back in and retests the level, there's only one thing on my mind. And that's this. It's a false break if price goes back to here. If price doesn't go back to here, then it becomes a B, C. And we're not going to be taken into a bad trade. So that's why it's crucial that that candle there is green, because momentum should be, if the bulls are in charge, as per that candle, the breakout bar, if the bulls are in charge, there's little doubt that they will take price to here. And if they don't, and this is the whole thesis of the way I trade, it's not about when they do. It's all about when they don't. If they fail, or if they don't go there, logically, the other thing is going to happen. So if X doesn't happen, Y generally will, right? And that's why these bars are crucial to me. Because if price comes back to here, there's a very, very strong chance it's going to a support level. Tick. Which is where we took our first profit, right? And sadly, it bounced off there too high. I figured it would bounce, but maybe only back to here somewhere. It bounced too far. Now I've got the situation where I've thrown a small amount of money. I only go in at 0.25%, but I've thrown that away. I haven't thrown it away. I didn't lose it, but I haven't gained anything either. So George's scenario, putting your stop loss there and just letting it go, makes perfect sense. I'm going to try that, George. You don't have to comment, but I'm going to try that just to see how that pans out. And that's why I asked you about the three amigos, or what I call the three amigos, and you call a rising pennant or wedge or something like that. So I think this is probably something that I need to take on board, and I'll be doing that next time I see it set up. I'll probably trade it both ways just to see how it all works. Anyway, I hope you've gained a little bit of insight as to what they mean to me. Those three amigos mean to me that this range is going to break to the downside, and I would anticipate it goes to a horizontal level or a support level, which I think you'll probably find is very close to the measured move anyway. Let's test that, shall we? Okay, trend line. There's the top of the range. There's the bottom of the range. There's your entry. I'm on board with this. I was on board with this. Now I've got to find another way in. As I said, the other way in is to wait probably till Wednesday, so that I can then get hopefully a bounce. This closes here, perfect. Tomorrow I get a green bar. That's exactly what I'll be looking for. So that is where I'll be looking to go with Euro Kiwi. All ties in with the Euro bearishness. And let me explain my version of the Euro bearish. Missed the entry, to be honest. Now, I need to explain, I suppose, to you guys that I'm not trading on small time frames anymore. Not because I don't want to, but because I haven't got time. The only time I've got in front of the charts is when I'm with you guys or early in the morning. And that doesn't suit. Early in the morning for me is like open of New Zealand and Australia, which is way, way too early. But there's the entry there. Perfect. Break and retest of the monthly pivot. Anyway, there's always a second chance. And now what needs to happen with euro dollar? Well, let me go and explain why I'm bearish. I'm bearish because of this level here. Not the horizontal level, though that comes into play, but it's because we have for the longest time been tracking nicely on this trend line. Trade line is not a trend line, right? We came straight to it once we came off the bottom here, down, what did we get to, 95 cents or something like that? Can't remember now, 94 maybe even. Yeah, 95 and a half. And it just skyrocketed straight back up here. But only to that level. And when you look at that level and what's happened since, you've got a massive rejection bar followed up by an even bigger seller bar. And for that reason, I'm anticipating more downside. Yet, just like I described earlier, I cannot, for the life of me, jump into that move right now. I've got to wait for a pullback, and there it was. Right? As I said, we've missed the first entry. But the second entry should come, and maybe, as I don't know, break the trend line or something like that. But that's what I'll be looking for. The where was I going with that? I was going somewhere else with that. Okay. Yep. Target. That's right. The target I see at the moment, the immediate downside target, is not far away. That's why I need to see this pullback. It's the second reason I need to see this pullback, because trading straight into that, and you're probably going, well, what's that? Well, to me, it's relevant. And it's just a structure that I use, right? It could well be a right shoulder of an inverted head and shoulders as well. And that's why I've drawn that. The other level or the other area is clearly there, where it's been resistance and support, which could also qualify as the right shoulder of an inverted head and shoulders. So what's my thesis here? Well, one of two. I want to trade to there and take profit. So let's go a bit tighter on that. Can I do that from here? No, I can't. But if price comes back to here and I go down a couple of time frames, so back into this area, then I can trade it down to here because I could take some profit before it hits that level. Then I've got a target area down here of 103.50. And if I'm really, really super keen on this going short, which I'm actually not, to be fair, beyond that level there. Once it hits that level, I'll probably buy it. I may not be, but I probably will be, because that's the level I think that the euro is going to next. But it's got to get through that level first. So that's the way I'm carrying that particular scenario. I've mentioned gold. We've been through I haven't been through dollar CAD. Dollar CAD is another one. But before I do that, I'm going to go to the dollar index. The dollar index, I pointed out last week, was a buy off this bar here. But it's gone nowhere, absolutely nowhere. Target area is very, very slim. It's either the trend line or trade line, or it's this horizontal level here. Why? Because it's been support, it's been resistance. So I find that as a key level, as everybody in the business calls them. But it actually surprised me that we're not up here already. You can see what the monthly pivot's doing, holding price up very, very well. But you can also see what the former support level's doing. It's been trapped in there, now broken out. I'd like to see this come back to here and then go. And that, of course, the dollar index being pretty much an upside down version of the euro, puts that into exactly the same perspective. So a little bit of a rally on the euro, back down to here, or a little bit of a pullback on the dollar index, and then a rally on the dollar index. So that's what I'm looking for. Up here, down here. Can I trade that today? So my bias is long to get short, and I hope that doesn't confuse anybody. It means I want to trade. I don't necessarily want to trade, but I want to see the market go long in order for me to trade it short. Because of an untested daily pivot, and if I were to get a setup, and I'll show you what that setup would best look like, it would best look like a break here, maybe hit that horizontal level, come back above, retest, enter here, target daily pivot. maybe even the weekly pivot if you want to hold on for a little bit longer, because there is a level there as well, just below the weekly pivot. So maybe that's the target for today on euro dollar. Can I trade it any other way? Yes, I can, but my reward would be far, far less than the optimal, which is what I've just described to you. Break here. It's got to take out the high. Break here, come back and retest that level. Then I could trade it to the daily pivot, but the reward is getting very, very meager if I were to do that. So that's not what I want to do. But guess what? What I want to do and what the market's prepared to give me are generally two different things. But if they do give me that, then I'm more than happy to take it. I don't know that I wanted to look at too much else, to be fair. Maybe silver. Silver, because I'm being perfectly transparent and honest here. I want silver down there somewhere. Why? Not because I want to trade it down to there, but because I want to buy some more physical silver when it gets down to this level. Is it going there? I hope so. And I know that doesn't help anybody trade, but that's all I can give you at the moment. I hope so. Should it? Look, when I look at this monthly chart, I do see, and I can probably amend that now. Let me get rid of that. Actually, I'll just move it and get rid of that. I'll just swap over. Kind of imperfect, but a few touches down here, which is good. False break, back up to the top of the range. And now we've come off the top. So we're now at a support level. Right there, maybe it's a little bit lower. Maybe it's in there, it's certainly in there somewhere. So if I saw silver give me a bounce and a lower high based on this, then it becomes a trade. That's the monthly chart. I'm going to be older, a lot older before that happens. So if I were to get the opportunity on a smaller time frame for the lower high, there's the high that I'm talking about, triple top, if you like. Just need to see price rally, maybe hit the bottom of that trend line. That would work and would still give me the lower high. So there's a bit of a confluence there, monthly pivot. So I've got now a bias on silver short term to get me up to here, not because it's magnetic, but it is, but because it just makes sense to me. Because I can't get short here now, of course, price can fall away. The only thing I can do is wait for it to come back to here. So it's kind of fingers crossed that it does, but when it does, it's time to pay attention. And that's exactly what I will do. So there are a few things that I'm looking at out for this week, and a lot will depend on tomorrow or overnight tomorrow and into Wednesday, because this beast here, the dollar index, is super important because of those CPI figures. And you can see, price is just waiting and waiting for those numbers to come out. And as soon as they do, I don't think we'll be in that range anymore. We'll be somewhere else. If I can get ahead of that, that would be amazing. And I just don't know that can happen, because price has only got 24 hours or a little bit more, 36 hours to do what I need it to do to actually get in the market. Maybe I could play a false break of that range if we got serious about that. So it all depends on that level up there. I really can't go any further than that. So that's it, guys. That's me for today, and Trading Buddies for this Monday. Thank you for being here. Sorry, Ash couldn't be here today and give us his brilliant knowledge around fundamentals, spot, and the seasonals, and of course the FTSE. We do miss him when he's not here. There's no doubt about that. But George has given us some good heads up on what he's looking for. Hopefully, I've been able to get through to you what I'm looking for. Sometimes that's a little bit convoluted. I do understand that, but nobody's asked any questions, so I assume you're understanding where we're coming from. Thanks to George for being in, and we look forward to your company on Thursday when we'll do it all again. Ash will be back. See you, mate. Thanks for dropping in. Thanks for the knowledge, and we'll catch you next Monday. And you guys have a wonderful week ahead. We'll see you on Thursday. Bye-bye for now. See ya.